Hello and welcome to the Benzinga podcast. On this episode of the Benzinga podcast, Benzinga's Alex has a conversation with Peter Schiff. Peter Schiff is an American author, businessman, financial commentator, video blogger, and a 2010 candidate for the United States Senate. He is also the president of Euro Pacific Capital, a brokerage firm based in Westport, Connecticut. This is part one of a two-part interview.
Hello and welcome to the Benzinga podcast. Today we have famed naysayer and Republican Senate candidate Peter Schiff. How are you doing, Peter?
I'm well. How are you?
I'm doing great. Let's get started with the questions. Last year, a friend of mine sent me a YouTube video of an exchange you had on CNBC with Arthur Laffer in 2006. After you made your case for the coming recession, he insisted that the United States economy has never been in better shape and vehemently denied any possibility of fundamental economic problems. He then bet you a penny and your honor that you would be wrong. 4 years later, history has shown who's really correct. But what I really want to know is this. Has Mr. Laffer fulfilled his bet?
Well, not only did he not pay me the penny, and not only did he not write the letter of apology, that was part of the bet, but he actually to this day denies that he lost. He's trying to claim that in mid-2007, when we had that bet, that the economy had never been in better shape, that everything was great, and that for some completely unconnected reason, maybe associated with a Barack Obama and a shift to the Democrats and the Republicans, this perfect economy that had never been in better shape, where monetary policy was spectacular, in his words, it all of a sudden collapsed. And there's no way that he could have predicted it at that time, which of course is absurd. What I tried to explain on CNBC, and if you watch the video, it's still up there. I mean, it's gotten about 400,000 views, just that 10-minute kind of debate on the Kudlow show, was that we didn't have a good economy like he thought. We had a phony economy. We had a bubble. I tried to explain to Art Laffer that the rise in the stock market and the increase in home prices didn't represent real wealth, and he said that it did. And my point was that it was an illusion. They were bubbles, that when the stock market came down and the real estate bubble burst, that phony wealth would disappear, and we would be stuck with a bunch of liabilities that we accumulated during the bubble, and that we were going to have the worst recession since the Great Depression to work off that debt. I said we would be in a recession for years, not quarters. And he said it was completely absurd. I was totally off base. I had no idea what I was talking about. And Art Laffer's not a bad guy. He's saying a lot of good things now about the problems in the economy. I don't know why he just can't be man enough to admit that he didn't see this coming in 2007, and that I did, and that I was right and he was wrong. At least I could respect that, when somebody admits that they got something wrong. But for him to keep saying, making fun of me, trying to, diminish my foresight, and trying to cling to the idea that he was completely right, I mean, that really is kind of infuriating.
Yeah, I can understand how, and he not only has he not admitted that he was wrong, he's also tried to belittle your analysis too.
Oh, absolutely. Yeah, he just says I'm a gloom and doomer. He goes, if you go around saying that the economy is going to crash for 10 years and it eventually does, you can claim credit for it. But that's not exactly what I was saying. But I did point out the stock market, the real estate bubble. In early 2000s, 2002, 2003, 2004, I was warning about the fact that we were inflating a real estate bubble. I didn't make any predictions as to when it would burst. I simply knew that we were headed in a dangerous direction. I didn't start talking about the bursting really until 2005, 2006, and that was kind of near the peak. We didn't really see the results until late 2007, early 2008. But, you have to warn about a crisis in advance. What good is warning about it after the fact? I mean, you have to be able to understand the dynamics. I mean, that's why, you have so many people now who are, trying to solve the problems with stimulus and bailouts, and they don't understand the problem. They think the problem was there wasn't enough regulation, there wasn't enough government. I understood that it was government regulation that caused the problem. It was government subsidies. It was artificially low interest rates. It was central bankers trying to stimulate the economy. The reason I was able to understand the phony nature of the recovery is because I understood how government policy had made it all possible, but that it was all phony. And that's why I understood. I don't know why Art Laffer couldn't figure it out, because it was staring him in the face. I think he was blinded by politics, that because George Bush was president, and he's such a Republican partisan that he assumed that, well, the economy must be great because Bush is president. Instead of understanding that just because he was a Republican, he was pursuing the same type of failed policies that Obama is now pursuing. He's just pursued them on a smaller scale. But, we had an economy that was based on credit, that was based on consumption, that was based on speculation, on trade and current account deficits, on all sorts of gambling on Wall Street and Main Street. And he couldn't understand that the trade deficit that was exploding was a sign that the real economy was contracting.
Well, that's a lot of really interesting information. I just can't see how Art Laffer can go back and blame Barack Obama for his wrong prediction when it was, like you're saying, it was the Greenspan era and the buildup of all that credit before he was even a big name in politics, really.
Yeah. In fact, I poked a little fun at Art Laffer in my new book, How an Economy Grows and Why It Crashes, which is a cartoon fable explaining an economy and how it works and why it doesn't. And it's a great book for people to read to really understand economics and understand the mess that we're in. It's a great book to give to your friends. But I have one page in there where I do have a character for Art Laffer. He kind of makes a cameo appearance, and he does, and I'm there too, and he's saying, there's a cartoon character for me, and he says that the economy's never been in better shape, everything is great, just before it collapses. But that's all in fun.
Of course, caricatures are always a good way to discuss politics. Now in your book, in one of your books, you also mentioned the notion of Murphy's Law. With so many things that could go wrong, one is bound to happen. So what do you believe is the most devastating factor, most likely to go wrong first in this economy?
Well, that's difficult. I mean, I was correct. I was trying to figure out what would be the straw that broke the camel's back. And my guess was, in Crash Proof, that what would precipitate the decline was going to be a bursting of the housing bubble. But I didn't know if it would burst on its own or if something would happen, such as an increase in interest rates. And, it kind of burst all on its own weight because rates never really went up, although, certainly teaser rates expired. And so people's mortgage rates went up, even though long-term mortgage rates did not. And that was a function of rising short rates. But I do think that what is going to be the catalyst is going to be increasing interest rates, ultimately, that result from a weakening dollar and rising domestic inflation.